All right. Hi, everyone. And thank you so much for joining us today for our Blurring of FinTech discussion. And an enormous thank you to Kelly Fryer, Sarah Biller, and the entire FinTech Sandbox team for organizing yet another dynamic Boston FinTech Week. For those of you who I don't know, I'm Devon Sherman, and I've spent the last almost 4 years launching and growing Mass Challenge FinTech, an accelerator headquartered here in Boston that drives intentional partnerships between FinTech startups and large enterprises in asset management, insurance, and banking. More recently, I've taken on a new role where I'm working with an incredible team at a newly launched organization called InnoFun, and we're focused on evolving Bermuda into the leading global insurtech hub with a focus on engaging the reinsurance sector. In both of these roles, it's been really energizing to see firsthand how much cross-industry pollination is at play, both within FinTech and InsurTech. And we're seeing powerful intersections in healthcare, education, climate, travel, and supply chain management, among other industries. So today we're going to dive deeper into these intersections, and I'm thrilled to be joined by an incredible group of panelists with representation from the government as well as the investor and founder perspective. So without further ado, I'm going to ask our panelists to introduce yourselves and give a brief summary of your organizations. And Greg, why don't we start with you?
Sorry, let me come off mute. Devon and fellow panelists, good to be with you. Thank you for having me on. My name is Greg Schell. I'm a managing director and partner at Bain Capital. I co-lead the Double Impact Fund, which is our social impact private equity strategy. We generally make investments in companies, that are small businesses. They generate, something like $5 to $25 million in EBITDA, generally in one of three big areas of focus: health and wellness, education and workforce, and sustainability. I think as the panel goes on, we'll talk plenty about how financial technology has begun to evolve all of those industries. I'm also here in the capacity of being an Eastern Bank board member who I think has made quite a significant commitment to the world of FinTech, including helping to develop and start a couple of really unique businesses, and very supportive of the FinTech ecosystem in this region. So that's me.
Thanks so much, Greg. Secretary Kennealy?
Well, great. Well, thank you, Devon, and thank you all for you and the FinTech Sandbox and all the partners for organizing the event today and having me here. On behalf of Governor Baker and our entire administration, I want to welcome all of you for joining us for Boston FinTech Week 2021. I'm the Secretary of Housing and Economic Development for the Commonwealth. I'm one of 9 cabinet secretaries in Governor Baker's administration. I oversee everything we do around housing, consumer affairs and business regulation, community development and business development, including, importantly for this discussion, all of our initiatives around the innovation economy. We identified FinTech really shortly after I became secretary as a priority area for us as we thought about the next areas of innovation where the state, in our view, had some natural competitive advantages and the ability to build out actionable strategies and grow jobs and grow opportunities within that sector. We formed something called the FinTech Working Group, which I'm pleased to co-chair with Mike Fanning from MassMutual, and that has now grown into our Mass FinTech Hub. And it's a great public-private partnership. We brought together business, finance, academic, and nonprofit leaders with our administration to help develop strategies for FinTech. So it's an exciting area for us. It's a priority area for us. And I will say by background, before I got into public service, I spent a bunch of years in the private equity business, about 15 years with a firm here in Boston called Spectrum Equity that has a meaningful participation and strategy around FinTech. I think we made our first FinTech investment back in 2004. So I've been around this industry a few different ways, and so happy to be with you all here today.
Thank you, Secretary Kennealy. Justin?
Sure. Thanks, Devon. Great to be here with you, fellow panelists and the audience. My name is Justin Bakes. I am co-founder and CEO of Boston-based fintech company Forward Financing. We're a small business-focused provider of working capital to small businesses throughout the U.S. We started the business in 2012 with a focus of helping small businesses reach their full potential. And since starting the business, we've helped around 30,000 small businesses across the U.S. Happy to be here and look forward to participating on the panel.
Fantastic. Thanks, Justin. Hayden.
Thanks, Devon, and thanks to everybody that's put on this, put all the effort into putting this great event in place. My name is Hayden Pirkle, and I lead go-to-market for API integrations at Patch, which is an API-first platform for carbon removal. At a super high level, Patch connects buyers and sellers of carbon credits via an API layer. So we're a marketplace, but as an as an API-based product, we're also an infrastructure company. So we enable developers and businesses to actually embed carbon footprinting and carbon removal directly into digital products and services. And so why are we on this panel? I think in many ways, Patch is an infrastructure layer that sits at the nexus of FinTech and climate. And we're doing a lot of work to power a lot of the climate FinTech applications that have emerged over the last 12 months or so. We'll dig into a little bit more about what we mean by climate FinTech here in a bit, but I think ultimately climate FinTech is another great example of FinTech colliding with another industry or space, such that the lines of what FinTech actually means and the types of experiences that FinTech platforms can deliver are continuing to blur. So super excited to be here, and thanks everybody for joining.
Thanks, Hayden. And last but not least, Justin. Or Jeff, sorry.
Hi, thanks, Devon. So Jeff McAulay, co-founder of Energetic Insurance. We're a Boston-based insurtech startup focused on the renewable energy industry. So we develop new types of insurance products specifically tailored to project finance in renewable and distributed energy, and happily exist at that intersection of the clean tech and fintech realms, and especially have benefited from the strong pillars of the community in both of those sectors in the Boston area.
Thanks, Jeff. All right, so before diving in, a couple quick things to note. So one, we really want this to be as interactive as possible. So for our audience, please fire away with any and all questions. You can put them directly into the chat and I'll weave them into our discussion. And then also just to ground us a little bit, there's a number of different industries that FinTech is meaningfully intersecting with. As you can see, our panelists have particular expertise on a couple of key areas that we're going to dive deeper into. So one is small business, and the other is environment, including both climate and clean tech. So that's what will be primarily focused, but also happy to engage in other topics as they organically arise in our discussion. So diving right in, Secretary Kennealy, to kick us off with a macro perspective, can you summarize for us how small businesses play such a vital role within both our ecosystem here in Boston and Massachusetts, as well as our broader economy?
Well, it's a great question. As we were developing an economic recovery strategy coming out of the pandemic, we told ourselves we had to do a number of things across the state. We had to focus very much on getting people back to work. We had a lot of dislocation in a lot of areas of our labor markets. We had to focus on housing stability and equity. We had to focus on downtown revitalization. And importantly for this discussion, had to focus on innovation, recognizing that ultimately here in Massachusetts is going to be the engine of growth for us, as it always has been. And of course, focus on small businesses. I mean, so much of our growth in jobs over the years has come from our small companies, in particular, our small innovative companies. So it's really, really important. Obviously, it's been a challenging time for our smallest businesses here, particularly those that operate, on Main Street. And I've been this discussion about the intersection of FinTech with other adjacent sectors is really interesting. If you think about, for example, Toast, which we saw go public recently, and how that is helping restaurants large and small in a new environment. So I think you're going to see our small companies generally be an engine of growth for us, in particular companies in the innovation economy. And then you think about the contributions FinTech can make to both through our small businesses and our recovery generally. It's such an important sector for us. We've had obviously a lot of strengths in innovation generally, but about 12% of our workforce also works in financial services. And so this generally is a very important macro sector for us. And then you think about innovations like contactless payments and loan processing innovations as well, and helping people access funds. I mean, there's a lot going on here that could be very helpful in ways large and small as we progress through this economic recovery.
Great, thank you, Secretary Kennealy. Greg, I'd love to turn to you and hear your perspective on the intersection of fintech and the environment, particularly as one of Bain Double Impact's fund's theme centers on sustainability. How do you see these two sectors coming together and informing each other?
Yeah, so I think in many ways, Secretary Kennealy began to lay that out, and it's unfortunate for me to go right after him. But what I would say in helping us think about that is that, when we think about fintech, on the one hand, it's become its own industry. There's lots of investment capital and value migrating to that part of our economy. On the one hand, on the other, though, we should really first think about it as a set of enabling technologies, really leveraging industries as we've come to know them, and that way we will see those enabling technologies really begin to assert themselves, into industries of many kinds. That's the first point I'd probably make, Devin. I think the second, it is not easy to conceptualize what it means to even bend the curve on some of these things like climate and the environment and sustainability, much less really get to a point where you're sort of driving real solutions. It will take enormous amounts of capital, first of all. I think second, it takes really evolved business models, and both of those are helped by enabling technologies that can take capital out of capital intensity out of these business models. I think the tech enablement generally through software and now to the extent that fintech begins to play that role, we stand a better chance to do a few things simultaneously. You have that less capital intensity, you have better business models, you have rapid prototyping and speed of getting feedback, and you can address things without having to put lots of physical capital in the ground. So there are lots of reasons why the progress in fintech in many ways will be an accelerant for lots of these big and even legacy industries. I think Toast, Secretary Kennealy makes the point that Toast has had a really enormous event for our region. Rewind the world, just a handful of years, no one would have ever said that much value could migrate to sort of restaurant point of sale software. You just wouldn't have made that bet, and the founders clearly thought that there was a need for more elegance and robustness in that infrastructure. And I just see that opportunity, being clear across a variety of industries. And so when you think about the world of the environment and what it means to sort of attack what we know to be, serious, challenges in the amount of capital that are required to solve them, that is really a really big target. It's a massive TAM in great need, of solutions. So innovators and, founders, I think, would have the environment as one of the small number of, really big targets that make it worthwhile. And I think the last thing that I'd say is, with us as a double impact fund, we're always thinking of and trying to back founders who have that dual perspective, where they're trying to develop really good and interesting value creating businesses, but do so with real mission orientation and the intentionality to do great things for the world. That's what we stand for. And so the blurring of these business models really stands out as an opportunity for funds like ours.
Excellent. Thanks, Greg. And, we've talked about Toast, a really incredible success story coming out of the Boston FinTech ecosystem. Greg, you're also a board member of Eastern Bank. Just wanted to circle back and ask both you and Secretary Kennealy, any other particular startups, whether it's in the portfolio companies of Bain Double Impact Fund or elsewhere, that you're particularly energized when it comes to small businesses or the environment?
Well, I love them all here in Massachusetts. So I'm gonna artfully dodge that one, I think. But I will say there's a lot going on here. Look, we've got by our count, 500 different capital providers here in the Commonwealth, 350 fintech startups. I mean, there's a lot going on here, and a lot going on in some of these adjacent sectors. Hope we talk about cybersecurity at some point, for example. But really happy with the level of activity here, and hopefully we see a lot more.
Great. Thanks, Secretary Kennealy. All right. So moving on to our founder and startup panelist. I've been really energized in learning more about Patch and forward financing. And energy reinsurance. So really great to have you guys on the panel. And Justin, I'm going to direct this first question to you, really building on what Secretary Kennealy shared. Can you expound on how FinTech is reaching small businesses in a meaningful way? And also Forward Financing just brought in its 30,000th customer, so congratulations. And also, can you share a use case that really brings this intersection to life for us?
Yeah, sure, Devon. I think Secretary Kennealy talked about it briefly. Main Street small businesses are the lifeblood of not just the economy here in Massachusetts, but across the U.S. There's 30 million small businesses out there. Over 99% of them are considered. There's 30 million businesses out there in the U.S. Over 99% of them are considered small business, and I think 98% of them are businesses with employees of 20 or less. And so these are the lifeblood of our economy and the majority of employers in providing employment. And so what we're doing as a FinTech business, Boston-based FinTech business, the problem we're trying to solve here is getting these small businesses the capital that they need to thrive and grow. And that historically has been a big challenge for small businesses. You have traditional financing sources like banks and other lenders, and the process for small businesses is very complicated. It's a time-consuming process. The amount of information that they need to provide to do that, the requirements in terms of needing capital, needing collateral, whether it's real estate, whether it's inventory, whether it's receivables. Think of the small businesses do they have that? Do they have those? And will that help them get access to capital? And the answer for, I would say, 90+% of small businesses is they don't have that. And so what we're focused here at Forward Financing is how can we build a product? How can we build a company? And that's what we've frankly been working on, that can provide meaningful access to working capital for small businesses, which is arguably the most important aspect of their business that's going to dictate whether success or failure for them, their people, their families. And so that's been something that's been exciting for us to work on. We've like I mentioned last week, and you mentioned here, we passed our 30,000th customer. A lot of them have been in Massachusetts, but it's all throughout all 50 states. And we've done that, providing over $1 billion to those small businesses. And so that's a problem we're trying to solve, and we're just getting started. There's a lot to do. There's a lot of potential. There's a lot of opportunity. And so that's what's really exciting in terms of FinTech for us right now.
That's fantastic, Justin. And is there any particular kind of use case or example you'd love to kind of bring it to life a little bit? Yep.
No, good point. That was the second part of your question. Good reminder. Yeah, I think so one customer that comes to mind, again, we're providing capital to small businesses. I have a few, but most recently we had a conversation with her. It's called the Herb Shop in Portland, Oregon. The owner is Amanda Furby, and this is a small business that caters, provides herbs, teas, et cetera, to people in the Portland, Oregon region. And they worked with us as they were really having trouble buying and stocking up on inventory so that they could provide product to their customer base. So they would take capital from us, be able to stock up on more inventory, have the flexibility to grow their business through sales. And that's just a differentiator, something that they need to do in that. Another one was a recent customer of ours is a company in Ridgewood, Colorado, Artisanal Homes. And that small business, they work in the construction business, and they had an opportunity to take on financing to start building on a new home project. And they weren't going to get that from the banks. They weren't in terms of an opportunity that came up quickly. And so we would work with them with a company like that. We were able to provide them with $200,000 to take advantage of an opportunity that came in front of them. And they were able to quickly act on it. So those are just a couple of them, but there's thousands of them, and they're all shapes and sizes. And it's not just the business, but it's the business owner, their families, and their employees behind it, which I think for me makes it so exciting.
Thanks, Justin, and really excellent examples. Jeff, you two are focused on credit with a particular focus on solar. Can you share your founder story about why you were motivated to start Energetic Insurance and really how you identified that gap within the market?
Yeah, absolutely. So my co-founder and I have been a part of the Boston energy ecosystem for over a decade. And so the inspiration for energetic insurance really came from a shared frustration trying to develop solar projects. So we came from the solar side and moved into finance because we couldn't get financing. So we said, where's the bottleneck? And in project finance, it's all about the efficient allocation of risk. Risk means insurance. So we said, can we create a new type of insurance product that more efficiently allocates this risk and helps get more projects done? I can't wait for the day when we can say we've got 30,000 solar sites under management. We're not there yet, Justin. So give us a couple more years. But when you look around, you get in a plane, you're looking down at roofs, you don't see a lot of solar. Maybe you see it on some residential properties, but there's a huge gap in the market between the small residential sites where you have abundant financing and credit metrics in the form of FICO and the large utility scale power plants in the middle of the desert somewhere. We have a lot of unused rooftops, and that's because of this credit barrier primarily, where that's been, we've seen renewable energy at scale benefiting the largest companies in the world. But the point of renewable energy is to make it distributed. And so that's really the vision that we're trying to realize. And that's not just solar. When you look at all distributed energy projects, if it's batteries or fuel cells or energy efficiency, these are all built on long-term contracts that are held back by some of these same credit barriers. And what's really important about renewable energy is you don't have a fuel cost. So the levelized cost of energy is all about how you can spread that capital cost over more time. It's all about how low you can get that interest rate. So we say finance is fuel because that's the lever that really allows these cleaner technologies to compete with incumbents because they don't have a fuel cost. So how can we drive down that cost of capital? And that's really our mission.
Thanks, Jeff. And I love that finance is fuel. You've also recently focused on affordable housing products. What drew you to this sector, and what have been some of the early approaches and results of that initiative?
Yeah, absolutely. We're really excited about that. One of our recent projects is a portfolio of 17 low-income housing sites in Boston, where we're able to help those sites get solar. We want to go a step further and really focus on the sector to enable solar, heat pumps, building electrification, EV charging, et cetera. We don't see these as sub-investment grade entities. We have a different view of credit. And so we see these are not just small businesses, these are essential businesses. So we've worked on grocery stores, cold storage warehouses, pharmacies, hotels. And it's not just about the cost savings, it's about resiliency, and it's about adding other amenities, covered parking, EV charging. We think that by taking on this risk, we actually make those businesses more creditworthy because we're helping them become more resilient. And we also include multifamily housing in that scope as well. As we've seen in the last year or two, these are all really critical sectors that we want to support.
Great, thanks, Jeff. And Secretary Kennealy, just wanted to turn to you with everything Jeff and the energetic insurance team are doing in terms of housing stability, unused roofs, anything else to add from a government housing perspective?
Well, I'm highly interested in anything that makes affordable housing more pervasive in our communities. We simply need a lot more housing in Massachusetts. And as we think about our state's economic competitiveness long term, we just wrapped up this future of work study. We released it a couple months ago, and it describes obviously a world where a lot of people are now working in remote and hybrid manner, and therefore talent is more mobile. As a state, we got to focus on our competitive advantages and competitive disadvantages. Frankly, one of those disadvantages is our high housing cost, and so we've been focused on housing for a long time now in our administration. But we need to produce a lot more housing here in Massachusetts, and if there are tools like the one Jeff described that can help us do that and bring down the costs of producing that housing, that's really, really interesting for us.
Fantastic, thank you. Hayden, similar to Jeff, you're actively merging the environment in FinTech. Can you help us define what climate FinTech is and what you're seeing in this space, not only with burgeoning startups, but also within larger financial institutions?
Yeah, absolutely. So I think quite simply, at least the way we think about it here at Patch, is climate FinTech is really any product or service that is enabling end users, which could be either individual consumers or other businesses, to drive positive climate impact through their everyday financial behaviors, habits, transactions, experiences. I think there's I think coupling together folks' financial experiences with climate action is this really powerful and compelling combination. I think ultimately climate FinTech really has the potential to be maybe the primary driving force of unleashing the green consumer, truly unleashing the green consumer. I think in many ways, climate FinTech applications can really give us as individual consumers the agency to participate in climate action in a very technologically driven, scalable, but yet automated way. I think anything that's sort of difficult to do, annoying, if it's not automated, it's something that we're just unlikely to do, quite candidly. And so I think we're seeing a lot of interesting applications emerge that are going to make it quite easy to make really impactful climate decisions at sort of the individual consumer level. Just maybe to put a finer point on what we mean by climate FinTech, I kind of want to outline a few use cases that we're really starting to see emerge in sort of this burgeoning climate FinTech space. So climate FinTech could be that's working with banking and investing products that are only investing in sustainable assets. It could be things like platforms enabling their consumers to actually redeem their credit card reward points to carbon removal projects rather than an airline or maybe statement credit. We're also starting to see a number of both traditional and digital banks offer the ability for users to get visibility into the emission profile of their individual transactions or purchases, and then often layering on the ability to act on that sort of climate insight through carbon removal. We're starting to see, and this is probably the space that I love the most personally because it's super fascinating, but also kind of strange in some ways, is we're starting to see a whole host of carbon neutral, or even more excitingly, climate positive crypto experiences across NFTs, the DeFi space, asset management and trading. And then I think candidly, quite surprisingly, but super encouragingly, is we're starting to even see enterprise level insurance carriers start to think about how they can embed whether it's carbon removal or just environmental sustainability a little bit more broadly into insurance products, whether that's enabling folks to track and offset their monthly driving emissions in some sort of in-product dashboard, or maybe offsetting the average emissions of the average American within a life insurance policy, throughout the term of the policy. And then to your question, Devon, about sort of is this concentrated among fintechs or incumbent FIs? I think what's great is that we're actually seeing a bit of both. So perhaps not surprisingly, it's your more it's your fintech startups that are perhaps at the vanguard of driving climate fintech forward. But candidly, the incumbent sort of enterprise level financial institutions aren't all that far behind. And I think you're going to start to see a ton of movement from some of the big banking and FI names that we all know on the climate fintech front really start to emerge over the next 12 to 18 months or so. This is certainly something that every large financial institution is at least thinking about, if not already building something.
Yeah, really interesting stuff, Hayden. And I think Patch's ability to drill down to that individual purchase and policy level is very powerful. Just one follow-up question from the audience. How are you working to attract new customers who have gotten used to their traditional services?
This one is to me?
Yes.
Yeah, so I think maybe it's important to reiterate. So in many ways, Patch is an infrastructure player. So I'm going to take a risk here and sort of put us in a similar realm as a Plaid or a Twilio or a Stripe. nowhere near as big or successful, although we hope to be one day. But effectively, we're providing the building blocks for fintech developers, for financial institutions to build climate positive products and features. And to your point about customer acquisition, I think that this is like a really interesting way to think about differentiating yourselves from a lot of the other products and offerings that are out there in the market. And as the sort of the green consumer becomes, increasingly commonplace in the market, I think it's going to be really important to sort of skate to where the puck is heading and start to build some of these features out. But this is a trend that is already starting to unfold, and a company like Patch is really there to make this easier to sort of grab hold of. We're there to make it more scalable, and we're there to make it more impactful.
Really clarifying. Thanks, Hayden. And just quick shout out to the audience. Please fire away with any questions. We have some awesome panelists here and would love to incorporate them. Wanted to turn back to you, Greg, in your investor perspective. As we can see, there's a lot of boundary shifting fintech activity out there. What advice would you give to these more interdisciplinary startups to ensure that their business models are not only fundable, but also scalable?
Yeah, it's interesting, and Hayden covered so many interesting aspects of this. I think you almost answered yourself, Devon, when you think about how important it is to achieve real scalability. Solving a problem, in a way that is scalable, I think is probably still the biggest thing that I would be thinking as an investor. I think all of the things that we would all know to be important, the size of the market, the ease of of using the product or service, the ability for legacy customers to easily switch without incurring lots of cost or friction or frankly time, and so on. There are more, but the ability to have that solution scale, I think, still is the biggest thing that'd be on my mind. I think what we've all talked about at some level is that the sort of barriers to establishing or at least prototyping solutions have fallen so far that there are lots of different opportunities to take shots on goal and to sort of posit different solutions. That's both a gift and a curse. On the one hand, the ability to get real-time feedback about what resonates most with customers certainly matters a ton. On the other hand, there are lots of different approaches too, and the business models that I think will ultimately win out are ones that establish really early on the ability to achieve critical mass, high sort of wallet share, and to be able to deliver a value proposition that scales naturally. By the time they see us, in a sort of lower middle market, you'd find more obvious signs of scalability of a business model. And I think that is still the thing that we probably look for most. I should say that our venture fund, it does far more true fintech investing than us, and probably would take a few different shots at businesses with real promise. But I think the logic still holds that what you ultimately want to see are teams that can not just scale technology but grow a real business, including having a robust chassis on which all this growth eventually sits. That business building aspect cannot be understated here. And I think, it is not true that the most elegant technology wins. It's in many ways the sort of solution that's, something more than good enough, but able to, do all the things that real enterprise, frankly, needs to be able to, have be true. As you make that bet on what's really, small, sometimes immature, companies. So all those things have to work together to produce a sort of interesting investment opportunity. If I were to call out one word, though, Devon, that probably, besides scalability, that probably matters to me most is really speed. Getting data and analytics and feedback allow you to sort of course correct, in ways that I think legacy companies just can't match. So fintech as sort of enabling technology, able to go after these really large TAMs, have some built-in advantages, but that piece about getting rapid feedback on what works and not is super important to me as well.
I wanted to jump in on this. I think that's really interesting that you brought that up, Greg. I think in the 9 months that I've been at Patch, my background is in fintech infrastructure, so I'm sort of new to the climate space. And I think the thing that is I've latched onto the most is like the true scale of the climate change problem. Like it is this massive endeavor that we're trying or challenge that we're trying to tackle. But just to maybe shed a little light on the sort of the potential of climate fintech. So we recently inked a deal with a company called Ascendo, which is out of Singapore, and they're a very prominent credit card rewards and loyalty infrastructure provider that works with like many of the biggest banks that we all know and use. And they have they have a customer footprint of 1.2 billion retail banking customers. And the use case here is they're going to be offering their enterprise banks with the ability to basically flip the switch and offer carbon offsets as an alternative reward type. And you start to think about if you just convert a very small fraction of those 1.2 billion retail banking customers to actually start redeeming their points for carbon removal instead of maybe flights, which are just increasing the problem. You can start to get a sense of how impactful climate fintech can actually be.
Yeah, I think I'll jump in quickly here, and Devon, I'm sure you have other questions, but to the point, I think Greg mentioned it was back to your original question from the audience around scale and how do we do it. For us at Forward Financing, one of the things that I think how we focus and how we look at our business is process, structure, and accountability. And for us, everything we do is we're trying to figure out how can we put a process to it, how can we put structure around it, and some form of accountability throughout the organization. And that's really how we've been working to unlock scale and growth for the business, right? Is for us, there's a huge market. There's tremendous potential, and for us, kind of the ingredient in how we do it as a company is those are kind of the three ingredients in how we evaluate ourselves, our opportunities, and frankly, applying that to how are we providing delight to our customer, right? Customer experience is just so important in getting that feedback, and then being able to embed it into that structure is so important for us in scaling.
Absolutely. Really strong advice and insight, Justin, Hayden, and Greg. We do have some audience questions coming in, which is great. We'll definitely save some time at the end to get to those. I did want to switch gears a little bit and talk about really fintech and access. And one of the most powerful and important aspects of fintech is its role in making financial services more inclusive and more accessible. So I'd love to hear from all of you. How do you think about inclusion and access at your organizations, and what role are you playing in driving that financial inclusion forward?
I can jump in quickly and then hand it over. So for us, for small businesses and providing them access to capital is what we do. Traditional ways, I alluded to it a little bit earlier, but to get access to capital is a months long or multiple months long process for a small business. So think of the restaurant owner coming out of COVID, think of an auto mechanic. Those business owners do not have the time to go to the bank and apply for financing. And so for them, just that alone restricts their access. So process in terms of getting access, the bar to be above in terms of requirements of business size and assets, and that is restricting access. And then certainty, they can spend months, weeks, months to try to secure capital and go down a process, and then at the end of a month, 2 months, 3 months, not get an answer that says yes from an underwriter. And so for us, speed, certainty, efficiency. So for us as a company, we receive an application, and within 3 hours, we're saying yes to them and up to $300,000. And that alone for a small business, that access, that speed, and providing them certainty, I think unlocks tremendous opportunity for them and something we're really proud of. And frankly, trying to reduce that. That's still a big commitment. That's still time to do. And so that's what we're focused on every day.
Yeah, I'd love to echo those comments. I think certainly it's about access. Every deal we do at Energetic, essentially is a deal that wouldn't happen otherwise. So these are businesses that can't get access to solar that now can because of our involvement, or at the very least, we're knocking cost off of that solar PPA bill, power purchase agreement bill. But beyond that, echoing what Justin said, it really is about deal velocity and certainty. Our customers are often renewable energy developers or lenders, and that process can take a very long time. And in order for those developers or banks to be able to get their lowest cost of capital, they have to have higher certainty that the deal is going to go through. So it is not just including more customers in that access, but it's also increasing the reliability and velocity of those deals.
I'm happy to jump in here. So I think we think about access through a slightly different lens at Patch. So it's less about access to financial services. There's already 1,000,001 amazing fintech applications, other financial services products, infrastructure players like a Plaid that are really driving forward that financial access and inclusion. I think we think about access at Patch more so about access, and I've sort of touched on this already, about access to climate action. I think it's this access to sort of technology-driven, highly scalable, but consumer-level climate action is what we're really all about, and we're trying to enable our customers to basically grant and provide that access to their individual users.
Yeah, sorry, I just go back on one more point. There's a really key thing that we look at is what neighborhoods is renewable energy going into. And so over 50% of the deals that we do are going into neighborhoods with below the national median income. And so we look at that as a multiplier effect. If we're putting solar on a grocery store, we're not just helping that grocery store, we're helping everybody who shops at that grocery store. These are, businesses that are low margin generally, or have high energy cost as a percentage of their expenses. So that has knock-on effects. And then we've seen, thankfully not in Massachusetts, but in other parts of the country where you have wildfires or storm interruption, these businesses that have access to affordable, resilient electricity become pillars of the community in times of crisis. And it's really, really hard to put a number on the value of resiliency, but boy, we're glad it's there when the storm comes.
I would just jump in and say we spent a lot of time in this office and across our administration focused on equitable opportunity for everybody in the state, and financial tools that can help our small businesses, financial tools that can help our first-time home buyers. We have a very aggressive strategy around home ownership. These can all be, I think, enormously beneficial. For our smallest companies during the pandemic, we had the largest state-sponsored small business relief grant program in the country with $700 million go to 15,000 companies through a very broad network of highly engaged community partners that are really deeply ingrained in their communities and provide a lot of hands-on assistance for businesses. And we're understanding better what the needs are of these smallest companies coming out of the pandemic. One of them, in particular, for our sort of traditional Main Street businesses, is doing more online. And so we now have a program called Empower Digital to help those companies market themselves and transact more online. So I think it's a very exciting time to think about fintech solutions that can enable a lot of that activity going forward and level the playing field and provide more equitable access. I will say just quickly on that note, I really like the theme of this conference: financial services for anyone, anytime, anywhere. It's a nice overall theme.
Devon, I wanted to, what Jeff said made me think that we're so used to innovation being the triumph sort of the new thing, never before thought of. I think a lot of what we've talked about actually is the sort of reimagining of how the old thing can be done better. And I think a big theme of the comments from our operators on this panel has been really about that. And I just want to double click on it quickly by saying what's so important about this and what drives inclusion and access is a sort of redrawing of how value chains actually come together. Where does value migrate, toward and away from? And I think the great promise of these enabling technologies is that you just cut out a lot of friction that we've been, in many ways, maybe too used to thinking was required in order to get to solutions. Industries have, sprung up as a means to, enable things to happen, but maybe quite inefficiently relative to the tools we now have to address some of those same challenges. So I think that's wildly exciting to just shrink the barriers that exist for the solutions that we know we want to drive to. Technology and specifically now, financial and enabling technologies, whether it's around true financial inclusion or payments or infrastructure or what have you. If you literally walk around the wheel, there's almost no, big sector that will remain untouched by some of the themes that we're talking about. And I just think that's wildly exciting. And so to the extent that those frictions, that keep us from better solutions continue to fall, I think we'll continue to see more entrepreneurs, like Justin, Hayden, and Jeff doing pretty remarkable things, but specifically trying to address challenges where we've maybe been too used to, a solution, but without understanding that we could do better and maybe much better. And that's part of what I hear all of them saying.
Yeah, absolutely. And thank you, everyone. Really, really thoughtful responses. And, part of what enables us to drive inclusion and access forward are robust ecosystems. And we have a really robust ecosystem here in Boston. And on this panel, a lot of representation from those key stakeholders within an ecosystem. So startups, capital, corporates, government, and academia. So I'd also love to hear from all of you, what is one part of the Boston FinTech ecosystem, or in some cases, the energy ecosystem for some of our startups here, that really excels and has really stood out as you grow and engage with your various organizations? And also on the flip side, where do you see room for taking our ecosystem to that next level of impact?
Go ahead. Go ahead.
Well, I was going to say, I think, collaboration's always been our strength across all these sectors. You look at what we've done now for many years in life sciences and this collaboration of business, academia, and government, and business meaning big companies, small companies, capital providers. To some extent, we're trying to replicate that in a few other sectors, including FinTech. I think it's a question in the chat here about the academic and STEM community. You look at our FinTech hub, we have 27 members and 4 from higher ed, Brandeis, MIT, UMass Amherst, and WPI. And so, again, I think this is somewhat, maybe not totally unique to Massachusetts, but it's been a hallmark of how we've done business here for a long time, that collaboration among academia, business, and government. I will say, appreciate this is called Boston FinTech, but since I got responsibility for the whole state, I'll just say there's a lot of opportunity outside Boston as well. And I mentioned MassMutual before. Having a large company like MassMutual that is a big presence in a variety of parts of our state, originally from Springfield, with a huge presence there, now of course in Boston, and a company that's willing to engage with smaller companies and academia, and really, with us spearhead this FinTech initiative. That's a really, I think, pretty special part of how we do things here in Massachusetts.
I think Devon, your point on differentiator, what drives the success and growth. I really do believe it's the people that we have here in the Boston community. When we look at the team we've been able to build, the talent that's in the market, and I think FinTech is still a early growing industry within the Boston market, and so I just see that continuously increasing, right? Everybody that has experience is going to continue to learn more experience, just going to make the population and continue to be a big differentiator for Boston to be a leading place for FinTech and other tech businesses throughout. That's clear for us every day.
Yeah, I would jump in here to add, I think for us specifically with Energetic, it's a little bit of a tale of two incubators. I come from the energy side, and Greentown Labs is one of the tremendous pillars of the ecosystem here. And we actually spent some time in Greentown at the early days of Energetic, but we were able to jump onto the FinTech side because that's where we really needed to grow. and we're in the DCU FinTech Innovation Center. And that was really tremendous for us to build our network in FinTech and InsurTech, as well as the folks at FinTech Sandbox. And so I think that the openness and the welcoming of those communities is really important. And I would say for anybody looking to get more involved in energy and climate tech, there's a really strong and open community here. Lots of knowledge resources and people who are eager to help. And we found the same thing on the InsurTech side. The hidden piece I want to emphasize is also the angel investors. So we benefited from angel investors who came from hedge funds, who had just exited in other InsurTech startups, who were longtime investors on the energy side. But we were able to tap both of those groups of angel investors when we were first getting started. And I think you'll see the same thing now that we have more IPOs, more success in the community. That should, and I hope so, will filter back into the innovation cycle through the active angel investment community we also have in New England.
It's hard to disagree with what anybody said. I like to think about it as, so capital and collaboration are two pieces that have been flagged already. And I think in many ways that's both of those things roll up to ecosystem development. I think FinTech has done a really, really good job of that. So I'm part of, and probably many of the folks in the audience are part of, like a monthly FinTech happy hour series that Nick Milanovic from Google Pay has rolled out. And I think they just recently hosted their first FinTech happy hour in Lagos, Nigeria. And I think that just shows how like this FinTech community or ecosystem building has really taken off. And then now it's starting to be something that we're seeing in the climate tech space and climate FinTech space, where the happy hours are not 500 people, it's like 30, but you're starting to see these groups get larger and larger. And that's where investors are there, founders and other operators are there, other industry stakeholders are there, all starting to sort of mix together. And then you start to see the seeds being planted for a community that's like clearly going to take off. And I think FinTech's been a great example of that. And I think we can start to see that in some of these sort of weird like FinTech, other industry melanges that are starting to unfold now.
Great. Well, thank you, everyone. So I'm going to turn to a couple of audience questions. We have a few minutes left. One question, which is most likely directed at our startup panelists here, from Jordan in our audience: what can established financial entities do to attract and partner with you to help fulfill the social elements of your mission?
I'm happy to start there. We work with commercial banks that, one of our premises is we didn't start a lender, a non-bank lender, because there's so much capital out there in the market today that's trying to access ESG asset classes. So we're all about helping those financial institutions who want to deploy capital sand off the edges of the risky bits that are preventing them from going in. If it's not investment grade or they're worried about certain return thresholds, we help make those projects investable so that the banks can justify that investment. So we're collaborative by nature with developers, with tax equity investors, with lenders. So reach out on the website, give us a call. We're happy to chat.
Great. Well, I think so. Last question for our panelists before we get booted off here. So kind of building off of that, a lot of our audience members, after hearing from you all, will really just want to get more involved in general, whether that's supporting small business, pushing for climate positive financial services, or just helping to evolve our innovation ecosystem. So just what is one kind of top piece of advice for people who really are eager to contribute more?
I'm happy to jump in here. So I'm going to give two pieces of advice. So I think for us as individual consumers, either start using climate FinTech applications to sort of take that climate action agency I mentioned before, or start to push on your existing financial services providers to build such products sort of in-house. And then I think for all of the developers and FinTech entrepreneurs that are out there, really start thinking seriously about incorporating some form of environmental sustainability into your product. Again, this can be a major differentiator for you. This is the way the sort of trend is headed, I think, in many ways. And ultimately, we think every fintech app is eventually going to become a climate fintech app. So just start to think about that from a roadmap perspective.
Yeah, I would add, definitely educate yourself. It's very easy. There's a lot of tools out there. My Climate Journey podcast in particular, just to help break down the universe. But also, there's this thing called the Yolo Economy, apparently, where people don't just want to work for jobs that don't have meaning. So we're hiring. Like, apply your financial skills to an area that really matters and deploy resilient, renewable energy infrastructure. And so you can really, you can vote with your dollars, you can vote with your credit card points, you can vote with where you choose to sit and work every day. And so we've got jobs posted. We're not the only ones. So really think about where you're spending your time in your career.
That was. Oh, you want to go ahead, Secretary?
Just very quickly, we would love it if more companies came to work with us on workforce skills initiatives, tech apprenticeships and internships. It's a great growing sector that needs more talent. We have folks that need, in some cases, more promising employment pathways. We have capital to do this. So we love to work with employers, big and small, on workforce skills initiatives.
Yeah, my only point was going to be echoed, Jeff. What are you passionate about, and be proactive with it. There are so many companies doing amazing things that are growing and looking for amazing people. So be proactive, do your research, and don't be shy about reaching out, whatever the opportunity is. And even if it's not there, reach out and express what you're interested in, what you've done, and see if there's an opportunity that can be created.
Great. Well, oh, sorry, Greg, you go. We've got.
We only have 5 seconds. I agree with everything that was said.
We might get the boot, but just wanted to thank our panelists, Hayden, Jeff, Justin, Greg, and Secretary Kennealy. Thank you so much. Big shout out to Boston FinTech Week and the FinTech Sandbox team for driving another fantastic conference. Please reach out to any of us with any follow-up questions. Hope to see everyone in the community soon. And just another big shout out to all of our panelists. Really appreciate all the thought and energy you brought today. So thanks again.
Thank you, Devon. Great to be
Bye for now.
Thanks, Devon.
Thanks a lot. Take care.